Welcome to the StockMiner.com studios. I am your StockMiner Brian Johnson, and we are into the first day of options expiration week for November 2010. Here we have the Dow on a 60-minute. Notice what we did. We crawled our way back up into this overhead line. I told you these were the lines to be watching coming into the week, and sure enough, proved itself today as it hit that line, ran away from it by the end of the day. So here we are trapped in. Who knows what it could be right now? It's still obviously trying to find its footing. We moved up, we moved down during the course of today. Maybe this turns into some sort of a symmetrical triangle. We're still really watching these lines here, and that's a break above this blue line and or a break below this area down in here. That would get us firmly below the 200. If you want to take a more of a spec trade, then below this 200 would certainly be the place to do it. On a daily, it's the same thing. Look how we managed to hold that 20-day for 2 days in a row now. It tried to get above it, but by the end of the day, this time, the bears brought it right back down. Not a big concern necessarily, just because we're still above 11,200, still holding in here very nicely. This also puts in a potential reversal candle here for Monday. Just a little weaker than what we thought coming into the beginning of the week. Mondays have been typically pretty good to the markets, and I mean, granted, overall it was up for the day, so I mean that is something. If you want to hang your hat on something as a bull, that is something. You were up for the day. However, the other two indices were down. They did not do as well as the Dow did. So we kind of mentioned it this weekend. There would be room for a little bit more of a move to the downside. But until we see these breaks in these levels, guys, once again, I got no reason to jump in. We did not break the blue line to the upside. We're not above 11,300, and we did not break below 11,100. So once again, you got your levels. Be watching those tomorrow if you want to take any kind of trade. We are kind of back below this 11,200, 11,250-ish, I should say, area. That is kind of in this overhead area, but really, it's still a very structured pullback right now. Any kind of good news, I think, rallies us. Any kind of break to the downside, though, we could maybe see a test of the 50 within some of these indices. Here's the NDX, and you can see it was down 6 points. This is actually the biggest, I guess, mover of the day, loser of the day. They weren't down a great amount, but you can see at that this came back up to retest some of these overhead resistance areas, or come close anyway, and still back below the 2140-ish area. High today of 2152. We've talked about that area a lot back in here, and now look what we're doing, wallowing around in it again. Biggest point today, though, is nothing really broke back below where we were last Friday. So, I don't know, nothing too major yet from the bear side. It's still very structured. Just continue to watch these overhead lines. I think these will work very well going forward. In the NASDAQ, make sure you watch the 200 and see if that will hold going forward. From a daily, we do now have a definite close below the 20-day moving averages. I had mentioned those were the places I was going to be watching very closely. We have our close below it. Can the bears keep it up? I'm still waiting for some kind of accelerated selling to come in, and it hasn't happened. So, while we are still looking to see if this will drop even a little bit further, I'm so cautious, so cautious. I think as everybody is. I think everybody's expecting the same thing I am, and that is a big move to the upside to come at any moment, because that's just what it's been doing since September. Look at this. Any kind of a pullback has been bought. Now look, we have another pullback here. You don't think that the bulls aren't going, yeah, we're going to buy this back up again. I think even the bears think that. So that's why we're not seeing maybe as deep a pullback as we would want to expect, just because the selling has not come in any great quantities yet. It's been a very, very slow, drawn-out pullback here. So hand it to the bears. They are moving this thing down, and have been now for a good 6 days or so, but it hasn't been heavy selling. There's just no panic whatsoever by the market. From a weekly too, it's only Monday. We won't worry about that quite yet. SPX on a 60-minute. Had this little symmetrical triangle thing. We've now broken that. We'll watch this overhead line as well. You can see us hold the 20 very well on the 60-minute. Moved right up into it and just kind of based and based and based and based. Looked like we might be putting in some sort of a bull pullback there, and then it resolved down as opposed to resolving upwards. But no major break below this area, which is what I'm watching, and no major break, of course, above these areas. Even below us, there's a ton of support down here. The whole structured thing has been very, very, very easy, very simple pullback in the market so far. Like I said, no heavy selling coming in here, so no reason to really be panicked. No reason to be panicked from the bull side quite yet. Below these levels, okay, now we have a reason to start to look at some more serious short opportunities, even from a swing trader's perspective. Looking for closes down below this 1185-ish mark. Then we'll start to break some of these levels here. As you can see, number one would be the 20-day. Number two would be the 200-period moving average. And as I said, there is a ton of obvious support below us. Here it is, about 6 days down in a row, and it hasn't been anything heavy. No heavy selling coming in here. No great panic within the markets whatsoever. And in this case, no move or close below the 20-day moving average. So we'll continue to watch our levels. From a weekly, getting extra support right here at 1190, which is the 200-week moving average. Can you see all the support we have down here? There's a lot of it. We have to break these levels before I really start to look at any more serious moves within the bear side itself. So far, very structured pullbacks. Very structured. VIX as well, up above the blue line for 2 days, but you can see we did that last time, and guess what? After 2 days, it went shoo, VIX completely screamed back down. We're in that same type of a setup. Will it resolve this way? I don't know. Maybe it does the opposite. Maybe it resolves up this time. But based on what we've seen in the past, last time we were 2 days above this blue line on the VIX, it resolved to the downside, which meant a big move up in the markets itself. Here we are above it again, 2 days. Will it resolve up? Gotta wait. Gotta wait. Really above 22, closes above 23.50, still what I'm waiting for on a VIX side. That would then indicate to me a little bit more panic coming into the market at that point. As of right now, just still. Even in the 20 area, guys, this is not a major amount of panic by the markets by any extreme. So until we get those moves back up above all these moving averages, nothing really to worry about here quite yet. Apple basing right down here on the bottom. Now I got to tell you, from a formation standpoint, this is more bearish than it is bullish. And this is looking like you can call it a low base, you can call it a descending triangle, whatever. Point is, it's bearish. So back below about 306 or so, probably opportunities to short, below 305, then 300, then 295 are really the marks I'm watching here. But this so far has not been, the last couple days have not been the most bullish of movements in Apple quite yet. And no real reason to panic. You can see we have come up out of this, drop back down. It's been doing this the last 6 or 7 days. We are below the 20-day for 2 days in a row. So if you have been long Apple, be cautious. Just be very, very careful up here. Determine what your risk is and play it that way. If you want to intraday trade this, which Apple has been very good at, below 305, then below 300, then back to 295, and you can see the 295 I think should act as extremely strong support down here. If it doesn't, we got some major stuff going on in the markets, and that would obviously be all over the news, and probably be noticeable within the VIX. So we'll know when and if that hits. But this 295 should be a pretty safe spot of support for Apple. If it breaks, oh boy. Apple on a weekly as well, still just high basing up here. Looks very good. It's only Monday, nothing to panic about. FAS, you can see how it got above the blue line. Maybe tweaked that ever so slightly. It really doesn't matter at this point. But you can see how we're back below it again, coming back into this 2350, but doing exactly what the markets did. No major lows in here, no really new highs in here, so nothing to go off of quite yet. Got to give it a couple more days to see which way it resolves. Still looking for breaks below 23.50, then maybe back into the $23 mark, or the 200 here should act as pretty staunch support as well. Those would be opportunities to trade. Otherwise, back above 24.50 is probably your next real opportunity to get long the markets. Would not be surprised to see some sort of a bigger gap one way or the other over the next few days. It all depends. Who knows which way that'll be. But you can see all the support that's sitting down here on FAS. Any moves back below these areas, I think we'll retest these blue lines. That's going to put us back into about 22. So once again, that's why I have those particular spots in mind. Now, the 20-day moving average is 23.41, so probably a little bit more cautious trade would be to let it get below this before you look at anything to the short side on FAS. Still opportunities to trade it back into 22 or so, which is still a good buck and a quarter or so of a trade on FAS. FAZ then doing the opposite, trying to work its way back upwards again. Anything back above 1180, then look at the 12 to 1211-ish area. Otherwise, you can see what we've got above us. It's a lot of overhead resistance. We got this blue line that we got to mess with once again. We got the 20-day moving average. I really think it's going to take some sort of big news or a big launch to get this thing up and over most of these areas. Could happen. Waiting on some news. You never know if this Ireland bank thing becomes a problem. If there's any more, if there's any more news released about global devastation of some sort or whatever. That could, of course, be the cue for these markets to head one way or the other, but there's going to need to be a lot of participation and a lot of volume behind these moves, and it's not there. It's just not there. All right, that'll do it for today's video. We're going to remain still neutral to cautious. I don't even know if that's really a stand. I got to remain necessarily neutral to bearish short term right here. I'm very neutral right now long term. I can't give you bullish or bearish long term. Not yet. I don't have enough information to give you that yet. But right now I am definitely more neutral to bearish short term because I have to be. The charts are telling me to be that way. If we can get breaks back above this 11,300-ish area, I might turn a little bit more bullish in the short term. Back below here turns me more, maybe heavier bearish in the short term. It's anybody's play at this time, though. The market's really left us in limbo at the end of the day. So watch your levels. Make sure they break before you take any kind of entries, and I'll be back with you again tomorrow night. Bye.